Good morning, traders. It is Friday, September 27th. Taking a look at the charts, we got the SP 500, and on the left-hand side here is our 30-minute trend analysis chart. This goes back to mid-July over here. We've gone from an uptrend to a downtrend, and we're back into an uptrend. And we're at the point here where we're very close to potentially rolling over and going back down to fall into a very large range. Could go right back down into more or less the range could be this big going forward. So we're trying to look to see if we're going to get some traction. We'll see how the week closes. The weekly close bar Fridays are pretty significant for overall power of the market and where some big position money is going to go. We don't really want to see it close on the lows of the day. We'd like to see it actually recover and hopefully maybe see a lot of short covering kick in at the end of the day, but that's just my bias. I'd like that to happen. Not sure it's going to happen. The price action is still bullish, but we do have some bearish patterns forming. So let's just take a look. More or less, if we were to just zoom in a little bit at this chart here, the recent price action, the market makes a series of bullish moves. You get these series of bull flags, and then suddenly it starts to get choppier, and it starts to break down, and you start to get this down saw, more or less almost like a blade, where you go from bull flags to bear flags, and we're still holding up above this key support area, and the technicals are still there. We do need to see the market start to extend and start a bigger move to the upside and start. This would be one bull flag, one leg, and then the second leg would have been bottomed out this week, and we start the second leg going forward here. And if we look at the daily chart, let me zoom in a little bit on the daily chart. If you look at the daily chart, you can see how it does have this little bit of a bearish bias in terms of the price action, where we've got down bars and we've got this what looks to be that little bit of a bear flag forming right up the 20-day moving average, and potentially this could move down and go a little bit deeper, test this 34-day moving average, which is also right into all these previous pivot highs in the market, which will act as a support zone as well. So there's potential here for the market to really shake things up, and we may end up getting stopped out and take a loss on this trade, but at this point we really just need to stick with the trend. And I know a lot of people are bearish, so that is a good sign for us. We saw panic selling happen 2 days in a row. When everyone's panicking out of their shares, it usually means the bottom is trying to happen. So overall, we saw our short-term cycle down here this week start to bottom out. And if that continues to play out to go to the upper end of the range, we're going to see the market continue to recover. And eventually, we could see this breakout to the upside, which is what we are in position for. Now, let's take a look over at bonds. Bonds are down today. They've had a nice rally. They're consolidating. More or less, the equities market and the safe havens like bonds and metals, they're inverse, more or less, pictures of each other. Where the stock market has a little bit of a bear flag forming, the safe havens have a bull flag forming. And at this point, though, if you look at the trend analysis, we are still red bars here for bonds. This is a reaction high at this point. It's come up into resistance, and this could very easily collapse and roll over and really flush out if the equities market breaks to the upside. So we have very limited position right now simply because the market is at a real critical pivot point, and no point in getting in a whole bunch of positions when you don't know which way things are going to break. You want to stick with the trend, but you don't want to be heavily weighted in anything simply because it can do a lot of damage if you're wrong. Let's take a look over at metals. Silver down 1.6%, gold down 1%, continuing to move down. Let's just move out, zoom out on the daily chart of gold and miners. Actually, we'll go to the miners. The miners show it a little clear. If we look at the chart of miners and zoom out here, more or less we're getting into the market where it's kind of rolling over. You can see we go from a series, think of a saw blade that is on a circular saw. You've got goes up and eventually has a peak, and then it comes all the way down and continues to go down, and it'll do that for the whole circle. And now the equities market, or the precious metals market right here, is equivalent to this or this. We're on this downward swing where we've had the market rally up continues to have a series of bull flags, starts to become more volatile, has kind of a break to the downside. Now we got the reaction high. This could continue to unwind and try and put out some bottom before potentially going higher later. So we'll see where things go. We talked about this coming right into the core resistance, a real pivot area in the market. It has reversed, and we'll see if there's much more downside to it. I think there is still more downside if the equities break out. I think we're going to see a complex correction, more like an ABC correction. Let's throw a Fibonacci extension to get a downside momentum move. So we got the recent high, the current sell-off, and then this is the reaction high, and we carry that forward. Pretty straightforward stuff. This gives you, and this is Fibonacci model. This tells us we should expect a sell-off. This is where the bounce was. We could very easily see it come back down, test these lows, and if you see a hiccup at the 618, this is the 618, then you typically are going to hit that 100% measured mark going forward, and that's potentially, it's this ABC correction, this break of another low. So you've got a series of lower highs, and now you're going to have lower lows, and those series is what flushes the market out. This is where huge stops will get run, and then it would be some type of washout low over here, and we could see a very strong recovery afterwards. So that's what we're looking for to unfold for the ideal setup. Looking over at silver, just so you can see what it looks like. Again, it had a big pop there. I think the pop could have been related to the JP Morgan traders caught for manipulating the market. I know JP Morgan's huge into silver. I think maybe some money piled into the silver, but it's fizzled back out. Again, same type of price action in terms of looking for a three-wave down, 1, 2, 3 waves to the downside, and then we'll be looking for a significant bottom in the market. Looking over at natural gas, down 1.1% this morning, continues to move down, and it tagged the 200-day moving average. It's pulled back, and if we just look at the price action, I already threw the Fibonacci on here this morning, taking a look at it, trying to get a gauge of where momentum should bring price. We've got the sell-off, then we got the rebound, and then we've got the 618, which it hit this day and bounced off it. If you bounce off the 618, you're typically going to hit that 100% measured move. So there's still some more downside for us to hit this 237 mark. It'll also be the 34-day moving average, which is a pretty critical support level. It gives us that ABC correction, which flushes the market out. And it is still in an uptrend based on our analysis. So we could be getting into a very significant point here where we could start to see a bottom reversal take place, and we could see a run up to, we have an upside target of 3 plus. So there's a lot of upside potential from where it's going. We're going to let it work itself out, but starting to get excited about this position. And of course, I think a lot of this big drop, if you've seen on the news that they're talking about new record all-time highs, high temperatures across the U.S., and that I think is playing a big toll in here. Is if it's going to be hot, there's not going to be much heat used, and natural gas is flushing down based on this weather move. And I think it's kind of an overreaction, and we're supposed to actually have Farmer's Almanac a very long cold winter. So this could give us a great opportunity to play into a cold winter rally. Looking over at crude oil, down 2.8%, really finished its pop and drop that we've been talking about. Again, I'm not a fan of trading on news, especially headline-driven news like this, where there's war and at any point some new piece of headline could come out and drastically move it. But if we look at this, the price, this gap in price, it has now, from the closing day over here to the opening on that Monday, it has come all the way down for 100% gap fill. It did form this bear flag. It came down, chopped around, consolidated, did the second half of the move, and more or less, now we're going to see how things are going to unfold. Again, if you just look at this overall chart, it is pretty messy. It had a high here, and then a lower low there, and then a higher high here. Overall, very, very mixed market, not one that I really want to get into trade. Anyways, I think that is it for now, and I'll talk to you in a little bit. Bye-bye.